On August 5, 2024, Japan's stock market experienced a historic crash, with the Nikkei 225 index plummeting by 12.4%, marking one of the largest single-day declines in its history. This dramatic fall was primarily driven by widespread investor panic stemming from concerns about the U.S. economy's health, which has been showing signs of weakness, particularly after a disappointing jobs report. The Nikkei 225 index closed at 32,991.88, down 4,451.28 points, following a drop of 5.8% just the previous Friday. This two-day decline is poised to be the largest in the index's history, with the total drop exceeding 8% over the 2 days. Reasons behind the decline: the sell-off was triggered by multiple factors. U.S. economic concerns. Investors were rattled by indications that the U.S. economy might be in worse shape than previously thought. The U.S. stock market had already been under pressure, with significant losses reported in the tech-heavy Nasdaq and other major indices. The fear was that these economic troubles could spill over into global markets, including Japan's. Interest rate adjustments. The Bank of Japan's recent decision to raise interest rates has added to market volatility. This adjustment has led to a stronger yen, which, while beneficial in some contexts, has made Japanese exports less competitive internationally. As a result, many investors began to sell off shares in anticipation of lower corporate earnings. Market sentiment. The overall sentiment in the market was one of fear and uncertainty. The combination of rising interest rates, a strong yen, and negative economic indicators from the U.S. created a perfect storm for a market correction. Historical context: this crash is reminiscent of past market downturns, particularly the infamous Black Monday in October 1987, when the Nikkei fell by nearly 15%. The magnitude of the decline on August 5, 2024, has drawn comparisons to that event, as it reflects deep-seated anxieties about both domestic and international economic conditions. Historically, the Nikkei has shown resilience in the face of adversity, but the current environment poses significant challenges. Immediate aftermath following the crash, the market showed signs of recovery on August 6, 2024. The Nikkei 225 rebounded sharply, gaining approximately 8.86% or 2,786.55 points to close at 34,244.97. This recovery was fueled by a combination of bargain hunting and a broader positive sentiment across Asian markets. The TOPIX index also rose by 9.20%, indicating a potential stabilization in investor confidence. Investor behavior. Many investors took advantage of the lower prices following the crash, leading to a surge in buying activity. This behavior is common in volatile markets, where sharp declines often prompt opportunistic buying. Global market reactions. Other Asian markets also experienced gains, with South Korea's Kospi climbing 4.30% and Australia's S&P/ASX 200 advancing by 0.71%. This broader recovery suggests that while the Japanese market faced significant challenges, the overall sentiment in Asia was beginning to stabilize. Looking ahead, despite the rebound, analysts remain cautious about the future trajectory of the Nikkei and the broader Japanese economy. Key factors to watch include continued U.S. economic indicators. The performance of the U.S. economy will continue to be a focal point for investors. Any further negative reports could reignite fears of a global downturn. Bank of Japan's monetary policy. The impact of the Bank of Japan's interest rate adjustments will take time to fully materialize. Investors will be closely monitoring any future policy changes or statements from the central bank. Corporate earnings reports. As companies begin to report their earnings for the quarter, the results will provide critical insights into how Japanese firms are coping with the current economic climate. Strong earnings could bolster market confidence, while disappointing results could lead to further sell-offs. In conclusion, the events of August 5, 2024 serve as a stark reminder of the interconnectedness of global markets and the rapid shifts in investor sentiment. While the Nikkei 225's rebound on August 6 offers a glimmer of hope, the underlying economic conditions and investor psychology remain precarious. As Japan navigates this turbulent period, the focus will be on how well it can adapt to the changing global landscape and whether it can maintain investor confidence in the face of ongoing challenges.